gold has some intrinsic value and a limited supply. Bitcoin doesn't have necessarily an intrinsic value.
How you can make fractions out of a Bitcoin is something that speaks more towards Bitcoin as an argument, because it will be more easily accessible than gold.
Bitcoin fans bring up that the government cannot reach it, but the past has also shown that in what way you can use Bitcoin, the government very much has a say.
Welcome to Swiss Money Secrets, your go-to podcast for insights on offshore investing and banking from the trusted Swiss perspective. Let's get into it.
Here we are back with the Swiss Money Secrets podcast. Elephant in the room. We've got a new surrounding, but that's not what we're here to talk about today. We're going to be covering gold and Bitcoin and which is the true store of value, kind of running a comparison. Before we jump into that, an interesting, I guess, development we're having in Switzerland at the moment is that there's a presidential seat that is open and they're struggling to find someone to fill the position. No one seems to want it. So maybe, Jamie Wers, you could tell us a little bit more about what's going on there in the political drama of Switzerland.
Absolutely. I think it's a very hilarious counter story to what's happening in the US. Switzerland is a country notorious for breaking down power structures. So we don't have one president. We have a federal council of 7 people. And they cannot really they could technically get voted out, but it's frowned upon to vote out a sitting federal council member. So they get to step back at their own time. And there's not really a set timeline for when and how they're going to step back. So our defense minister, who was responsible for the army, she decided a few weeks ago to step back in March. And the party that gets to fill the seat, they are really struggling with finding candidates who want to do the job, which I think is quite a funny storyline and might be interesting for our US listeners.
Yeah, I mean, as an American, to think about one of the most powerful positions in the country and everyone's like, no, not interested. They put a candidate up. No, I'm okay. I don't want that. I mean, those are jobs that Americans would crawl over each other for.
And also, the reasons why they don't want the job are hilarious. It's I don't feel an inner desire to do it, or I don't think that it would be suitable for my work-life balance to become a member of the Federal Council. So, yeah.
But I think it makes more sense in Switzerland in the context of having this council of 7 people where you have to come to a solution where everyone is okay with it. And especially when it comes to the military, there is a lot of investment that is needed in the next couple of years. At the same time, the budget is tighter than it was in other areas. And so it is a challenge to take over this department of military and to find a solution that is that works for the majority of the council and also for the government politicians. Yeah,
absolutely. I think that's one really good point. The other side is, politicians in Switzerland it's not their career. It's a certain percentage of the work that they do until they move to this position. So it's a really big move to take on this role, because you have to kind of, as you said, my work-life balance, you have to take on a whole new job essentially and kind of leave behind to a certain extent what you are doing in the current environment. And all of the politicians are working already in their own companies or their own jobs, as well as being a part of the Swiss government. So I think that's something that also kind of changes the perspective a bit. But so fun, interesting. There's also a very fascinating development in Switzerland with an initiative that's put forth to be voted upon, which is the Bitcoin initiative. Maybe, Urs, you could kind of fill us in exactly what that is, or what's the purpose of this initiative?
I mean, very basically, it is that the people who launched the initiative, they want that the Swiss National Bank has to have a certain portion of their wealth in Bitcoin.
Yeah, I think right now it says in our constitution that the Swiss National Bank has to hold a part of their currency reserves in gold, because we used to have a gold standard for a long time. And now those people launched the initiative. They gathered enough signatures for this to become a vote, essentially, by the population in a few months or a few years, that they want to force the Swiss National Bank to hold Bitcoin as well. And I think that fits very neatly into the topic that we're covering today. Because they claim that Bitcoin has the same essentially benefits or metrics as gold, and it would be a sign of the time to also include more innovative asset classes in the balance sheet of the Swiss National Bank. But our national bank is very independent, so they're completely politically neutral. They are not under any sort of political guidance. So personally, I'm not sure if it's the right way to force them into certain asset classes. They have a lot of experts on their team, so I think they can probably make this decision for themselves. If they think it would be smart to hold Bitcoin or any other cryptocurrency, they could do that already. So I'm not sure if it's the right way as a population to force the Swiss National Bank to invest certain asset classes, irrespective of whether it be a good idea or not. I think it should be left up to them to decide what they want to hold.
And I think it's also important to keep in mind the reasoning behind why this Swiss National Bank is investing, why they are exchanging the Swiss franc into gold or US dollar or euros. It's about price stability and an exchange rate that helps the economy to grow. It's not about investing. It's not about speculating or getting any returns. It's really about how can we create an environment that helps our economy to thrive.
Yeah, and I think those are very good points, and we're going to cover a lot of some of the caveats of what Bitcoin and gold are as we go through our discussion, and it leads really well into what we're going to talk about now in the sense of what are we looking at Bitcoin and gold. I mean, gold has been around for thousands of years. I mean, dating back to ancient Egypt as a currency. It's been used as a store of value, for jewelry, whatever. There's a lot of use cases currently. It's in technology as well. And Bitcoin is a very new asset. I mean, even if we talk about in comparison to gold, when we're looking at a store of value, it's been around for maybe 15 years. And where it's really risen to prominence in the past 7 to 10. And so I think there you kind of have to look at, okay, what are the facts around them? I mean, gold, there's to this date, I think 100,000 metric tons of gold. So there's a supply, that's a lot, but it's still limited. And with Bitcoin, it's limited to 21 million, I think will ever be the biggest. And I think right now there's about 20 million in circulation, and it won't hit its full capacity, that 21 million, until I think 2164 or something, the year 2164.
I don't know.
Yeah, it's gonna take a long time essentially to hit that. And so gold has some intrinsic value and a limited supply. Bitcoin doesn't have necessarily an intrinsic value other than maybe some of the, I guess we could say, the technology that's behind it, but other cryptocurrencies are using that technology. But there is use case. I mean, Bitcoin initially was introduced as a trading a currency, essentially, for buying goods and services. And now it's become this store of value, which is quite an interesting evolution to see.
I think also Bitcoin was also invented to make the process of moving wealth from one place to the other much more efficient. And so I agree with you that there are use cases, but it's really important to understand this difference about the time horizon where you are familiar with gold and how gold works, and whether this intrinsic value, how much it is really its intrinsic value and how much it is that people just grant this value to this metal. I mean, that's not really the question. The question is, what are people familiar with and what kind of faith does this asset has?
I think in theory, you can very much make the case of Bitcoin having similar to almost the same kind of facets to it as gold. But there is oftentimes a difference between theory and practice or reality. And right now we are still in an early adoption phase. I think only a few percentage of people in the world hold Bitcoin. I think it's like 1 or 2%, and like 12 to 14% of the population hold gold in some variation. So as long as we are still in this early phase where we have mostly retail investors that invest in cryptocurrencies, I think there's going to be more fluctuation and volatility in the price, and that's going to fade out over time once people become more familiar. The hypes are going to ebb a little bit, regulation becomes more clear. So I can very well imagine that over the past few, or like over the next few years or decades, that Bitcoin will become more similar to gold in the way it is used. But right now, I think the problem is that the retail investors are not necessarily seeing it or using it as a store of value, because institutional investors are still very early on. I mean, it has only been a little over a year since the SEC has allowed crypto ETFs. And a lot of the institutional investors, especially here in Switzerland or outside of the US, are still hesitant to really include it in the portfolios that they manage. So as long as that's the case, I'm hesitant to really see Bitcoin as a store of value, just because of the herd mentality that can drive prices crazy up or down. I mean, we saw it now with the US election, had a tremendous impact and started this kind of new bull run circle that is not really typical for a store of value kind of asset.
Yeah, and I think there's a lot to look into that. I mean, especially when we kind of look at, okay, who are the people that are interested in Bitcoin and who are the people who are interested in gold? Gold, obviously, there's a lot more interest because of its historical nature. And with Bitcoin, as it becomes more popular, it's kind of the people who are a little bit dissatisfied with where things are monetarily. And gold is also one of those things. I mean, where there is a lot of gold regulation in terms of it's been around for forever, people, institutions, governments, they have a lot of safekeeping around it to make sure that it's clear, but that's because it's a physical thing. It's hard to transport, not hard, but it costs to transport it. But at the end, once you have that physical gold, you can kind of do with it what you want, cut it up to trade it with people, make jewelry out of it. It's malleable. And with Bitcoin, what's fascinating to me is it is malleable in a digital sense of being able to break it down into very small pieces of itself. And so while you do have this limited supply of Bitcoin, it can be fractionalized to a huge degree. And I think from that side, that's where we're going to see in the long term, okay, where does this go as a store of value versus, as you mentioned, was, being traded constantly back and forth.
But I think the fractional, like how you can make fractions out of a Bitcoin is something that speaks more towards Bitcoin as an argument, because it will be more easily accessible than gold. Because yes, you can cut gold in theory, but how many people at home, like in their living room, cut up gold, right?
Yeah.
I think what speaks for gold more right now is it's something that everyone understands. Like from child to senior, everyone understands a physical precious metals that you can trade against the fiat currency. Whereas with Bitcoin, still, it has gotten better over the years, but I would say there's still a certain level of technological knowledge and familiarity with tech to be able to hold cryptocurrencies and Bitcoin. I think if I think about my parents or even grandparents, they would never be able to buy Bitcoin on their own because they just wouldn't understand where to start and how to go about it. And I think that's something that's probably also going to become easier over time, because it will become more accessible either through products or through some sort of like stock exchanges or something like that, or crypto exchanges. But right now, I think it's still easier to buy physical precious metals for a lot of people than to buy a digital currency.
Yeah, and I think that is certainly due to, as you mentioned, the platforms where you can get it. I mean, you can drive down any street in the U.S. and you'll probably see a shop that says "We buy gold," and they're definitely selling it too if they're buying it. And with crypto, I mean, that's what we see. A lot of at least in Switzerland, a lot of the startups that were in crypto were trying to figure out solutions early on for their parents' generations who were interested in it and were attracted to the alternative investment classes, but didn't know how to do it. So they got their children to do it for them. And there was a lot of innovation there. And so I do think that there's a lot of use cases for Bitcoin, as you mentioned, and in terms of its usability is going to be fantastic. One of the I guess, how they try to compare gold and Bitcoin with each other is, as a store of value. One of them that they argue is that it's a hedge against inflation. Now, if we look over the past 15 years, certainly for that whole time horizon, Bitcoin's appreciation against the US dollar as a digital currency far outpaces inflation. A lot of the naysayers to Bitcoin are it's too early to know. Where gold, we have a very long track record. And even gold itself, if we really look at it as a hedge to inflation, we don't have such a deep track record there either necessarily, because we had the gold standard for so long. And then there were these movements by the US government taking back gold from the people who had bought it, and that happens around the world. So I think there's you have to kind of look at, okay, how are the governments going to react? And the regulation issue is a big one with Bitcoin of how is this going to be? Will the institutionals and the regulation of it really present Bitcoin in a different picture in terms of volatility?
Yeah, and I think the accessibility part is also very important. That's one big argument that Bitcoin fans bring up, that the government cannot reach it. But the past has also shown that in what way you can use Bitcoin, the government very much has a say to limit or to allow it. And at the end of the day, if you want to use it, you have to bring it somehow back into the system. And that's not very easy. I mean, we saw it with many of our clients that made their wealth or part of the wealth out of Bitcoin. As soon as you brought up cryptocurrencies, Bitcoin, it was like, oh, then we need this and this and this to prove that it's really your money and that it's not money laundering or anything like that.
Yeah, and I think especially the desire, that kind of back to the profile of who's looking at Bitcoin and those people being dissatisfied with the system and looking for something around it. If you live your life in Bitcoin, great. But as you mentioned, governments like China or other countries lock down hard on it. Other countries open up, like El Salvador and some of these other countries really say, okay, no, we want to be a part of this. So it depends on where are you, how accessible is it? There's a few restaurants here in Zurich that you can pay in Bitcoin, but that's not everywhere. It's not totally accepted by the quasi powers that be to pay for it yet. And so, go ahead.
Just want to say in Zug you can pay your taxes with Bitcoin.
Yeah,
so.
True. Yeah. No, and so there's a lot of openness to Bitcoin, but there's also a lot of challenge because of this whole decentralized factor, and governments don't really want to let go of that.
What I find really interesting is it's often like one side is pitted against the other. So it's like either Bitcoin or gold. And oftentimes it's also a little bit of a generational divide. Not always. We have some older clients who are very interested in cryptocurrencies. We also have some younger clients who like gold. But generally speaking, we see the older generation preferring gold and the younger generation preferring Bitcoin. And what I find really interesting is I believe that there's more common ground between the two camps that might be like seen on the first sight, because the reasons why either camp is either for gold or for Bitcoin are very similar to the same. They distrust fiat money. They see inflation and the depreciation of the US dollar as a threat to their wealth and their financial security. And they're seeking ways to diversify out of this world order where governments and central banks just keep on printing money and racking up debt. And I think that's something that we can very much sympathize with and something that we also see very critical. So I think can also be interesting to focus on the underlying similarities between the worries and thoughts of the two camps, and not so much focus on the different conclusions that they might come to.
I think another reason which enforces the age gap or the generational gap is that we have seen within the precious metals world, especially gold, we have seen phases where gold just didn't perform. But these people, they hold on to gold and now they're getting rewarded. So their thinking is reinforcing, okay, gold, that's the way to go. We have seen the same between 2018 and 2022, I would say 23, with Bitcoin, where I know people, they bought Bitcoin at 60,000 and then it went back to 17,000 and they hold on to it. And today they feel rewarded and say, oh, I was right, that's the way to go. But as Jamie said, both are in some way correct. And there is not exclusively one or the other that you should do. But I believe that a combination of the both should be the solution for most most sophisticated investors.
Yeah, absolutely. I mean, that's the whole principle of diversification anyways. And I think to a certain extent, I do like that Bitcoin has done as well as it has because it gives another alternative investment for diversification purposes. Now, when I think about it from a capital preservationist standpoint, it's still a very high risk investment because of its movements up and down as a professional. When you're working with clients, you have a certain risk category, risk appetite, time horizon, goals with the strategy that can be terminated at any point.
Yeah, I think the time horizon is an extremely important point. I mean, if you're 20 and you have $5,000, your time horizon is going to be very different to someone who might be 70 and just retired and has 500,000 saved up and doesn't have the time to recover. Because if you're looking at a 30, 40, 50 year time horizon, a lot of asset classes are going to do just fine. But if you might need the money in 3 or 5 years, you might be forced to sell at a very unfortunate time. So I think while I fully agree with Urs that they can go together, I think it's also very important that we don't make any investment recommendations here, because it's very important that you are fully familiar with everything that you invest in. We always recommend that you consult a financial advisor before you take any positions, and whether one or the other can make more sense can depend on a variety of factors. Of course, one of them is personal preference, but there's a lot of hard factors to consider as well.
Yeah, absolutely.
Yeah. Absolutely, yeah. I totally agree. And the comfortability is very important as well. If you don't feel comfortable holding Bitcoin, don't hold Bitcoin.
Yeah. And I think that's the reality with most investments is you really need to go in with good information, being fully informed to the best extent. Even when working with a financial professional, ask them questions. That's what they're there for, to answer your questions. If you don't understand what you're doing or the strategy, make sure you understand it. I mean, for me, a lot of the time spent outside of the crypto world was because I simply didn't understand it enough to feel comfortable investing my own money in it. And that is something that is very important. People vary differently on their risk appetite, what they're willing to handle, how they see things. And there it's really, really important, as you guys said, hey, know what you're investing in, be comfortable with understanding how it can move, what it will do, and what are its options to being able to leave. I think liquidity is also, obviously a big issue in any kind of investment. And Bitcoin's liquidity, some people are holding it, so liquidity is low. If prices tank and you get nervous, but most people are trying to hold it, you might not be able to get rid of it. And so you just have to, and that's with almost every investment where things are, understanding the liquidity is a big need as well.
Yeah, absolutely. I think to conclude, I find it very important to once again point towards the fact that a lot of people are worried about US dollar depreciation, rightfully so. That's something that we hear from our clients on a very regular basis. That's something that worries us as well. And it certainly makes sense to think about how you feel about your government spending, how you feel about the debt levels of your government, and that you think about strategies, how you can mitigate those risks. We have now spoken a lot of gold and Bitcoin. It's in the nature of the topic that we discussed today, but there's also other options like the Swiss franc, for example, which is a great hedge against geopolitical risks as well, for example. So I think it's good to stay curious and informed and open-minded, and to really think deeply about the risks that keeping all of your wealth in US dollars can pose to your financial situation.
Yeah, absolutely. About the risk, geopolitical risk issue, is Urs actually sent us this study here today that we got to read just a little bit of before we came in here, which was Bitcoin and Swiss franc standing out as, in the recent time frame, as doing really well or better than even gold or other kind of, I guess, less risk-free, not risk-free investments, but traditional safe havens. And I think that speaks a lot, not only for diversification, especially for an American when we talk about Bitcoin, but your point to, hey, is there other options where I can go, where other places in the world are doing things differently? That Urs mentioned at the top of the episode, that the SNB, the Swiss National Bank, is focused on price stability solely. And there are places to go where there are safe havens to build that nest egg outside of the US that have a long-term track record of holding its value against the US dollar with opportunities to be invested as well.
Yeah, and maybe also from my side to conclude on this topic, especially with Bitcoin, I very much agree that the history of Bitcoin we have so far doesn't allow a final verdict on Bitcoin. And whenever you buy Bitcoin, always keep in mind it can go to zero. And if you can live with that, then you will be fine.
Absolutely. And I think from my side, what I just really want to emphasize is diversification. I mean, this is our bread and butter. That's what we always tell everyone that we speak to. There is no one perfect solution that works for everything. You need to have a little bit of everything to have a stable financial situation where you have asset classes that do not directly correlate with each other, where you have exposure to different currencies, to different investment classes, and that will certainly add a lot to the safety of your net worth.
Great. Thank you, guys.
Thank you so much for sticking with us for the whole episode. As Jens mentioned in the beginning, we are in a new studio. So if you are only listening to the audio, you might want to check that out on our YouTube channel, where we have a lot of other content for you as well. Either way, whether you're listening or watching us, please make sure to leave a like and a rating and review. It would greatly help us, and we appreciate you sticking around. See you again in a month.
Thanks again for joining us on this episode of the Swiss Money Secrets podcast. If you would like to learn more about WHVP and what we do, check us out on our website at whvp.ch. Or you can check us out on any of our social media handles on LinkedIn, Facebook, YouTube, or Instagram by simply searching WHVP. Have a great rest of your day.